Well, the thing here is that PNC is a great institution, and believe it or not, this is a great time to apply for a PNC business loan. So in today's conversation, I want to share with you PNC Bank, their $3 million business loan program. What are the 10 requirements that you need to understand to get approved within 3 days? In some cases, you can be approved within 2 days. Okay? Don't you go anywhere. I'll be right back. Welcome back, folks, to another edition of the Awesome City Kiwi Show. How are you today? I hope you are doing fantastic. I'm doing marvelous, if you were to ask me. If you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. In today's conversation, I want to talk to you about PNC Bank $3 million business loan program. And here are the 10 requirements that you need to understand to get approved within 3 days. Before I even start, let me just give you an overview. So when we talk about PNC Bank, we are talking about 4 different business loan programs, okay? Overall, of course. So you have the small business loan, the secured small business loan, the small business commercial real estate loan, and you have the small business vehicle finance loan. And all those 4 programs are pretty, the requirements for each of the 4 programs are kind of similar, okay? So there are 10 requirements. And one thing you need to understand is that, so when we talk about the small business loan with PNC Bank, loan amounts go from $20,000 to $100,000. So you have a streamlined application and decisioning process, no collateral required, and you have an easier payment processing, okay? And you have very convenient terms. For the secured small business loan amounts go from $100,000 to $3 million. And you can use business assets to secure lower loan rates and longer terms than unsecured loans. They have the small business commercial real estate loan, and here you have loan amounts that go from $100,000 to $3 million, okay? Again, here you have easier payments, no checks to mail or trips to the bank. Payments are automatically deducted from your business checking accounts. Very convenient, okay? And then you also have the small business vehicle finance loan. So here you have loan amounts from $10,000 to $250,000. And so you have financing for the vehicles your business uses every single day. What we love we love the fact that they are convenient terms. So you can select a fixed rate with a term between 2 and 6 years. So here you have it. You have 4 loan programs. And the maximum loan amount is $3 million, okay? And it depends on what you want to do. One thing you would find is that if you want to get $3 million, the maximum loan amount, you have to collateralize the loan. It has to be collateralized, either through real estate or either through your own. You have to pledge your own business assets. Now, one thing that you need to understand is that when we talk about the top 10, before I tell you the top 10 requirements, there are a few things you will need to know or have available to successfully complete an application. If you are interested in PNC Bank business loan, you need to understand that to apply online, you must be a PNC Bank business banking borrower. If not, you can apply at any branch. So the thing is, they're not forcing you to become a customer. However, if you want a business loan from them, they want you to actually come to a branch. So we just believe that it just makes sense to have a business bank account with PNC Bank. This is really good, okay? And you got to know the dollar amount, type of loan you're applying for, the borrowing purpose, and the collateral information, if applicable. If you want to secure the loan, then you want to have an idea of the collateral you are going to pledge for this particular loan, okay? You need to have available any special loan promotion offer code you may have received, if applicable, okay? Let's say they have actually solicited you in the mail and you want to seize an opportunity, then not a problem. You can contact them, okay? And PNC will need some information about your business. Not a lot of information, but there are some standard information, pieces of information that they will need from you. So they want your business legal name, street address, phone number, email address, the type of business organization, the year established, date acquired by the present owner, and industry code. So I'm talking about the NAICS, okay? So when I talk about type of business organization, it's basically, is it an LLC? Is it a sole proprietorship? Is it an LP, S Corp, C Corp? And they will also want to have the business tax ID or social security number. So if you have a sole proprietor, then they want to have your social. But if you have a legit business, a real business, then they are fine if you have an EIN. So this is what we call here EIN only business funding. So really good. They will, PNC wants to also see your annual sales, your gross revenue, and the number of employees. And in some cases, they want to have information about each owner with 25% or more interest in the business. Okay, so they want you to, if you have a more than 25% interest in the business, they might require you to post as a guarantor. It really depends, but in some cases they are okay with not having a personal guarantee. But if the amount is high, if the loan amount is high, they might ask you to post as a personal guarantee. As a personal guarantor for the business loans. All right, folks. Now I want to give you the top 10 requirements. But one thing I want to say here is that those requirements actually come from the business lending guide that PNC Bank has posted itself on its website. Okay, so this is not something that we just came up with. No, it basically came from the lending guide that they have posted. And so here is the first screenshot on the screen right now. You can see it. And here is the second screenshot. So basically, here is a complete list of the underwriting criteria. So if you're interested, you want to go to a PNC's website to learn more. So in today's conversation, we will analyze, interpret, and explain each of these criteria. Okay, let's start with your credit history. So criteria number one, your credit history. It's very important when we talk about credit history. PNC wants to understand your personal credit history and also your business credit history. So basically, they are saying that if you are a business owner and you are required to guarantee any business loan, they want to make sure you have a stellar credit history. And PNC wants you to have a clean personal credit history of 5 or more years, typically with no recent 30-day late payments. Okay, significant loan balances or open credit accounts can diminish creditworthiness, and no evidence of collection accounts, charge-off accounts, foreclosures, unsatisfied tax liens, judgments, or lawsuits. Okay, that's what we talk about, the personal credit history of the owner or owners. One thing I want to say, if you have a fair credit or even poor credit with a PNC Bank, but you do have a strong multi-product relationship at the business level and at the personal level, it is possible to get a business loan. Definitely possible. We have advised clients, and this is something that's, definitely possible. But you got to have some cash. You need to have some cash. You need to have some deposit accounts with them. You need to have an established history with them as well. You also got to think about your business credit history. So PNC pays attention to your Equifax commercial credit report. Okay, so a history of paying financial obligations of all types on time, and no evidence of bankruptcy, unsatisfied tax liens, judgments, or lawsuits. Significant loan balances or open credit accounts can diminish creditworthiness. That means that if you have a lot of loans, a lot of outstanding loans, the loan amount that you might be approved for from PNC might be lower. So this is something you need to think about. And PNC only pays attention, they only check your Equifax commercial credit report. So if you want to apply for a loan, a business loan from PNC Bank, it's just better to look at your Equifax, because a lot of people think about, oh, I want my DMB paydex score, blah, blah, blah. Okay. But you also need to pay attention to your Equifax commercial credit report. Criteria. We have a criteria number 2. Years in business. So we are talking about generally a minimum of 3 years in business under the same ownership for traditional business lending solutions. So really, it's important that PNC wants to have a history. So PNC is not really known for startup lending. Okay, so if you are a startup, you're not going to get a loan, a $10 million loan from them. So they want to have at least 3 years. Okay, and other credit solutions may be available for newer businesses. However, they're not going to going to approve you for a maximum of 3 million. You can get 50,000 or 75 grand if you have a stellar credit, but not that much. Okay, so number one, credit history. Number two, years in business. Number three, company financial trends. So it's important to understand that PNC wants to make sure your company is generating revenue that just makes sense. Okay, so upward or stable trends in revenue, gross profit margin, and net profit margin. So historically, operations are profitable. So what they do is they are going to look at your balance sheet, your income statements, your statement of cash flows, and your statement of owner's equity, and they will look at historical trends. They will do quarter over quarter analysis. They will do year over year. They probably will do over 5 years to see if there has been an upward trend. Okay, so this is important. And PNC also pays attention to criteria number 4, business debt service coverage. And so your business's earnings before interest, taxes, depreciation, and amortization must be more than its annual forecasted principal and interest payments. So when we talk about EBITDA, so EBITDA or EBITDA, this is basically an important element, but PNC wants to make sure that your EBITDA is way more than your annual forecasted principal and interest payments. So your business has to generate enough revenue to cover the interest payments, to cover the principal payments. Okay, and so pay attention to that a lot, because PNC in the last 5 years has been very strict about this particular metric, business debt service coverage. Okay, especially for established businesses, they want to see a sign of strength. They want to see a positive number. They want to see a sign of strength when it comes to liquidity, the cash your business generates to cover your debt. Very important. Criteria number 5, folks, we have debt to income ratio. So PNC wants to really understand that they will calculate your debt to income ratio, and we are talking about your debt to income ratio at the personal level, but also at the business level. Okay, what is debt to income ratio? So when we talk about your personal debt to income ratio, this is the personal debt payments of the owners subtracted from their income should allow for 60% left for payment of living expenses and taxes. What am I saying here? PNC wants you to have a debt to income ratio of 40% or less. Okay, so basically they want you to have 60% left to cover everything else. So after you have paid your loans, you have enough money to cover your debts. And this is important. So when we talk about debt to income ratio, we are speaking about you take whatever amount you allocate to your debt servicing. So this could be $4,000, for example, and you divide that by your gross income. So if you make $10,000, this is an example, and you are basically spending $4,000 on debt servicing, your debt to income ratio is 40%, right? 4,000 divided by 10,000 multiplied by 100, that's 40%. And so that's criteria number 5, sorry. Number 6, leverage. PNC Bank pays attention to leverage a lot when they are reviewing your business loan application, especially if you're looking for a large loan amount up to $3 million, okay? And so leverage means what? A company's proportion of total liabilities to the company's net worth. So stronger companies have more net worth than liabilities, and liabilities typically should not exceed 4 times net worth. This is important. So let me give you an example. If your net worth, when we talk about net worth, we are talking about your equity. So Your assets minus your liabilities equals your net worth or equity. Okay, so banks wants to make sure, PNC specifically wants to make sure that your liabilities do not exceed 4 times your net worth. So if, for instance, your equity, your company's equity is $1 million, your liabilities should not be more than $4 million. This is important for them because if you are over leveraged, there is a big risk. There's a big risk, and PNC Bank wants to make sure that you actually take care of that, and they don't want to lend to such a risky institution. I want to talk to you about number 7. Okay, are you still with me? Are you taking notes? I want you to take notes. This is important. So now your payment history with PNC. This is criterion number 7. So if your company has borrowed from PNC in the past, no late payments or charged off loans. So PNC pays attention to how your business has behaved in the past, not just your business, by the way. If you have a personal history also with them, they will want to see basically how you handle the payments in the past. It's all about having records of your payments behavior. This is important, right? I mean, it's all about financial responsibility. If you behaved well in the past, chances are they are going to give you the loan that you are asking for. Okay, so make sure that you have a clean payment history with PNC, either at the personal level, but also at the business level. So when we talk about clean payment history, we are speaking about all kinds of debts, not just installment loans, no, but also revolving credit lines, also credit cards, and other types of debts. Criterion number 8, recent checking overdrafts. Yeah, you might be thinking, oh, an overdraft is a small incident. It's really a small amount, not really a big deal. No, you got it wrong, boss. Because PNC Bank pays attention to a lot of things, not just the big items like, large loan amounts, bankruptcies, all that kind of stuff. No, they also pay attention to small items, overdraft. Why? Because if you can't handle small items, how are you able to handle big items? Talk to me about that. Doesn't make sense. So please pay attention to small items like overdraft. Make sure that your balance, your business bank account always has a positive balance. Okay, you want to cover this liquidity issue. You want to cover any liquidity hole you may have. Very important. So if your company has a checking accounts with PNC, little or no overdraft activity. Make sure that there is little or no overdraft activity. And honestly, it's kind of easy to prevent the overdraft. If you don't have enough cash, or if your company is in an industry that is subject to cyclicality or seasonality for that matter, then you can actually get a line of credit, a small line of credit from PNC Bank to make sure that if there is a little gap in your liquidity, then the line of credit will actually chime in to cover whatever operational chasm you have. Okay, I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another session of the Awesome Sweet Kiwi Show. We're also having a conversation about 10 criteria, 10 requirements you need to understand. If you are trying to get a business loan from PNC Bank, the maximum loan amount is $3 million, okay? And criteria number 9, the industry type. This is important. I mean, you have to understand, they pay attention. Like PNC Bank they have a database of industries, and they assign risk profiles to each industry. And this is part of what they call macro analysis. This is not idiosyncratic to PNC Bank only. I mean, all big lenders, all lenders for that matter, do that. And so you want to make sure that your macro is positive. So if you are a company that operates in volatile or cyclical industries, you must show longer time in business and strong financial performance. And this makes sense because, hey, listen, PNC Bank is trying to cover their ass, okay? If you are subject to cyclicality or seasonality, they want to make sure that you have been around for a long time to actually navigate the ups and downs, the ebbs and flows of the industry. Very important. And how do you do that? You need to show a strong balance sheet. You need to show a strong income statement. You need to show a strong statement of cash flows. You need to show a strong statement of owner's equity. We are talking about a full view here, okay? And also sometimes they might want you to actually explain things a little further in a business plan. Very important. This is an important document, right? A business plan is not really just to talk about your business in positive terms. It's also there to explain to a reader, to explain to a business lender what are the ins and outs of your business, okay? Where your business has been, where it is, and where it's going. And criterion number 10, the net worth of owners. Okay, so the strength of the owner's personal net worth demonstrates secondary repayment support. And this is a really important also. So the bottom line here is what? The bottom line is that if you are an owner and you have a negative net worth, PNC is going to look at the business's net worth and make sure that the business itself, as a standalone entity, can repay the loan, okay? Because your negative net worth might have a detrimental effect on on the business unless you have a strong EIN only policy. In other words, you have a strong legal entity. The business operates, actually, I would say as a standalone entity, okay? It's an LLC, LLP, or that kind of stuff. And so those are the 10 criteria. But before I close the conversation, I also want to talk about an 11th criteria that's not really a criterion, but an 11th criterion. It's collateral, okay? In some cases, if you have to collateralize the loan, and I did not really put it as a main criterion because not all business loans are collateralized with PNC Bank. You might choose to actually not collateralize the loan, okay? But when we talk about collateral, PNC wants to make sure that you have strong marketable collateral that provides secondary repayment support. Okay, typically, lines of credit must be secured by a business's current assets with sufficient market value to cover the line amount. So term debts must be collateralized with marketable assets such as equipment or real estate to cover the loan amount. So they just want to make sure that you have stellar collateral in case you want to collateralize or you need to collateralize the loan. All right, folks, this is it for today's conversation. I was talking to you about the PNC Bank $3 million business loan program, the 10 requirements you need to understand if you want to qualify real fast. Number 1, we have credit history. Number 2, we have years in business. Number 3, company financial trends. Number 4, business debt service coverage. Number 5, debt to income ratio. Number 6, leverage. Number 7, payment history with PNC. Number 8, recent checking overdrafts. Number 9, industry type. Number 10, net worth of owners or owner. Thank you so much for your attention. I will speak to you another time. But until then, remember, stay marvelous.